What's going on, guys? It's Luke here, and today I wanted to make a quick video going over the first presented fair value gap and how I've been using this to catch reversal type trades. I actually ended up using this on Thursday. I'm recording this on Friday, so this was yesterday. If you go through my live trade commentary section on the Discord, I'll try to pull up the trade. It's in here somewhere, but anyway, I'll post a screenshot or something later. But anyway, we ended up catching this reversal, so I didn't catch the entire move up, but I'm going to talk about how you could have. But I ended up catching this initial push right here. I didn't get the re-entry I wanted, but I'm going to talk about basically how important these draws on liquidity, these fair value gaps are in terms of catching reversals. And if you look here, we ended up catching about 200 points from that low, which I mentioned. Now let me find it. Yeah, right here, 425. So I said 425. I initially said 428 because that was the start of the gap, but then I had to adjust the gap because I had kind of drawn it wrong. But anywhere in this gap, I think the actual low was 22 or 23. So basically, let's put the replay tool back on, and I'm going to show you guys like what I was looking at. Okay, market opens up. And price is just dumping, right? We had market open right here. Market's just dumping down, and most people are you're trying to catch a continuation lower to the next sell side draw on liquidity, or you're trying to find the reversal point. And everything is just getting run through. We have a 4-hour gap right here. It's just getting disrespected. We have another gap right here. It's just getting disrespected. So I scrolled over all the way to the left, and I seen that we had this 15-minute gap right here. And this is a first presented gap. If you don't know what it is, it's basically the furthest down gap. So if we're looking at a leg up, we're looking at the lowest fair value gap. And if you're looking at a push down, you're looking at the highest fair value gap. Basically, it's the first gap that's presented on the huge leg to the upside. So as you can see, this is the first gap presented here. It's the furthest down gap in this big ass leg to the upside. So therefore, it is a first presented fair value gap, and it's on the 15 minutes. So it's going to hold some value. I find that 15 and up are the best for this. If you go below the 15 and you go like the 5-minute, it gets a little bit sketchy, of course. I don't go below the 5-minute on these type of big reversal plays, but 15 is perfect for me. So I see price coming into this level, and I'm obviously just not going to set a limit. I'm going to wait for some type of confirmation once price tags this level. And another thing is, you have to look at it, right? We already took out London low. We already took out Asia low. We took out all this sell side liquidity. We do have draws on liquidity lower. I don't have them marked out. We did have this swing low, but at this point, you have to understand we're tapping into a first presented fair value gap. We're likely going to want to see a relief bounce of price. And on top of that, I do believe yesterday we had 830, we had news. So we had this 830 high that we could target right here, right? So at this point, I'm thinking, okay, we can probably catch some type of relief bounce. As long as I get 1-minute confirmation, I'm ready to take this trade. You know what I mean? It's a high risk trade, but it's a high risk to reward. So basically, we're within a 15-minute first presented fair value gap. We tap in. We have 830 highs that I want to see price target, or I want to catch something, right? So for me, I wait for a 1-minute inverse, and that's what I'm trying to take the trade off of. So basically, we get this 1-minute fair value gap, gets run through, enters somewhere on the retest rated around here, and we had some 10 a.m. orange folder, so I wanted to lock in profits. So on this initial push up, I ended up scaling about half right here. So I secured about, let me see what it was. I don't know the exact amount. I know my entry was somewhere around here, but regardless, we ended up catching about 60 points or so off that initial push. The rest of my position got stopped out break even. And I did want to take this re-entry right here because we had another inversion. We failed to sweep below. This would have been a good re-entry, and as you can see from there, we ended up pushing up, and we had draws and liquidity higher. That was the main thing. We had this 830 high, and then resting above that high, we had an hourly bearish fair value gap right here that you could have easily used to target, into. So if you targeted that hourly gap as your like take profit, and you got in the entry, even from here, right? You're catching over 140 points. And, like you can catch these crazy risk rewards from here. You just have to look for that confirmation. I don't set limits personally. So a few things with these gaps, right? Number one, I find that, again, using the 15 and up is the best for this. The hourly, the 4-hour, the 15-minute. You can experiment with the 5-minute, but I prefer this. Again, it's going to be the lowest and the furthest down gap on this big leg to the upside, right? Number two, you're going to wait for confirmation when it gets into this gap, whether that be an inverse fair value gap, break of structure, or something like that. And you need to make sure you have draws on liquidity above, or at least a point where you can manage the trade at break even. For me, I seen price come up. It's trading into and respecting opposing gaps. I already secured 60 points. I secured half my position. I'm fine with running the trade to break even at this point. If you want to hold it, get the re-entry rate here, you're good to go. But number one, wait for that inverse or something to take the entry off of. Number two, make sure you have targets or something to draw higher. And personally for me, I find that when price taps into the CE point, which is the midpoint of this gap, that's obviously going to give a lot higher probability, or if you run your stops below, to let it kind of weather that. So if price would have came down here, manipulated lower, like below, and went like this, and then came up, you know what I mean? Dragging your stop loss below isn't a bad idea as well. But anyway, these are the lowest gaps. These are the strongest gaps. If this gap gets inversed, then you know price is just going to continue to flood to the downside. But if this gap holds and you get some type of inverse, I find that it's a really good entry. And I've been using these, and I love using these because they provide crazy risk rewards and crazy reversal points. So quick video for me. I know I have a few videos on this as well. I'll probably link them somewhere on the screen. But that's going to wrap it up for me, guys. This is the first presented fair value gap, furthest fair value gap, whatever you want to call it. Same shit. Great concept. Lowest fair value gap in the leg for bullish, and if you're looking for sells, would be the highest. That's going to wrap it up for me. If you guys want to join the Discord, link is in the pinned comment. If you guys want a discount for Alpha Futures, link is in the comment, pinned comment as well. And that's it for me, and I'll see you guys in the next one. Weekly outlook tomorrow. Talk to you guys then. Peace.